morning and welcome to NYSE Live. I'm Ashley Mastronardi. Markets are fractionally higher this morning as the Dow Jones Industrial Average is coming off a third straight session, closing above 50,000. Traders are also digesting the delayed January jobs report, which we'll dive into in just a moment. The data was delayed due to a partial government shutdown that ended last week. Meanwhile, Brazilian Fintech AGI celebrates its initial public offering at the NYSE this morning. AGI, which will become the 28th Brazilian-based company listed on the NYSE, raised $240 million in its IPO and will trade under the ticker symbol AGBK. Here's what else is on tap this hour. We'll have coverage of AGI's IPO celebration throughout the hour here on NYSE Live, including a front row seat to the opening bell at 9:30 Eastern and an interview with the firm's founder and executive chairman, Marciano Testa. In just a moment, Greg Farinello, head of U.S. rates at Amerivet Securities, is going to help us break down the delayed January jobs report and explain what impact it could have on the Fed's plans in the coming months. Plus, before NYSE-listed Scott's Miracle-Gro rings the closing bell this afternoon, its CFO, Mark Scheiwer, joins me here in studio to discuss its anniversary celebration and the company's collaboration with Martha Stewart. Just over 30 minutes ago, the Bureau of Labor Statistics released the delayed January jobs report, giving investors a fresh glimpse of the U.S. economy. Here's what we learned. The U.S. economy added 130,000 jobs last month. That's well above economist estimates of 55,000. Additionally, the unemployment rate fell slightly to 4.3%, a tick below estimates. And joining me now to share more about this is Greg Farinello. He's the head of U.S. rates at Amerivet Securities. Greg, welcome to the New York Stock Exchange.
Ashley, thank you for having me again.
So what are you taking away from this report?
It's better than expected, clearly. If you look at the unemployment rate, if you look at Fed policy, the Fed is going to follow the unemployment rate, which ticked down to 4.3. So we look at this report as very constructive, short term, and we look at the Fed on hold right now. There's nothing for the Fed to do here with the unemployment rate of 4.3%.
Do you think it's going to affect potential rate cuts moving forward, this number this month?
Well, it could, and you and I talked about this a little bit before the segment. What gets the Fed lower from here is really, I think, inflation in the end, excuse me. And if inflation is able to come down in conjunction with a strong job market, then the Fed is going to have some room. And if inflation doesn't come down in conjunction with a strong economy, then the Fed is probably going to be on hold here for a long time.
And I understand you believe that the Fed has room to cut rates closer to 3%. That's about 50 basis points from where we are now. What would justify that, and how soon can we see it?
Well, I view it as similar to last year. It's more of a back-end endeavor, I think, for the Fed. And they're going to wait and see here. You have Chair Powell. You're going to have Chair Warsh, I think, ultimately in the end. There is going to be a bias for rates to come down, but the economic data needs to cooperate for that to happen. And I think it's more inflation at this point than anything else. If the administration is able to orchestrate a strong economy with lower inflation, then I think rates will have the ability to come down. But that sort of 3% level, if you go back historically and if you look at a more normalized rate structure, which I think we're in right now, 3 to 3.25, that's kind of where we've been over time.
All right, and I know you're bullish on the economy. You say that we're in a good place. What data points are telling you that?
I think the economy is in a good place. I think a lot of the policies that were put in place in 2025 have yet to come to fruition. I think they will come to fruition this year. So when you look at the legislation, when you look at what's coming out of Washington in general, when you look at even interest rate policy, I mean, rates have come down quite a bit, really, from the peak. So we are bullish on the economy. If you look at capital market activity in general, if you look at the debt capital markets, if you look at the equity capital markets, if you look at overall activity right now, it's very, very strong. And if you look at the regulatory environment, which I think is going to be very conducive in 2026, we expect this to be a very, very good year. It's not going to be a straight line. It's going to be a little choppy, but we expect it to be a good year.
And we have an IPO here at the New York Stock Exchange, AGI. It's a Brazilian fintech, is going public.
Awesome.
What is your outlook on the IPO market for 2026?
I think it's strong. I think it's good. I mean, when I look at our equity capital market business, it's definitely strong. Last year was a little difficult, but in general, I think the equity capital markets are going to be very strong. You're going to see more consolidation over time. We're seeing that already because the regulatory environment is good, but it's going to be a good market for. And
you've also said that inflation isn't a problem at this stage. What are you seeing that tells you that price pressures are easing?
Well, we talk to mainly institutional clients. What I try and do is I try and talk to individuals too, on top of that. And the consumer, I think, is a little tapped out here in terms of inflation in general, required inflation. If you look at homeowners insurance, if you look at car insurance, if you look at things that people need to have in place, pricing has gone up. So the overall pricing structure has gone up over the last 4 years. Year over year, we've come down, but I don't see inflation as the problem here at all. I think, if anything, the Fed is going to hedge toward the labor market going forward, but we don't see inflation as a problem here going forward.
Speaking of inflation, CPI data is coming out on Friday.
Yes.
Delayed from January. What are you anticipating?
Look, I mean, inflation in general is a little elevated right now in terms of the Fed's target, right? They want inflation down to 2% in general, but depending on how you look at the inflation numbers, we're probably unlikely to get down to that 2% target. So we're running, if you look at core inflation really across the board, we're running 2.5% to 3%. GDP is running hot, and that's why when you look at 10-year yields at 4.20, that's why yields are having a tough time coming down, at least on the long end.
Given all of the economic headwinds, what do you think investors need to keep in mind as they navigate the markets?
For this year?
Yeah.
Look, it's going to be a good year. I think, when I look at AI, I look at that as one particular bucket in terms of an allocation, in terms of where you need to be. You need to have exposure there. But when I look at broader markets right now, we are broadening out, and I think we are broadening out because the economy is doing really, really well. So you can't put all your eggs in one basket. It's not all about AI. AI is going to be a very influential tool going forward, but the broader economy is doing well here. So,
any other sectors you have your eye on?
Look, defense is definitely an area that you have to focus on here. I mean, whether it's here or abroad, I think the defense sector is something that's going to be a key focus going forward. And, healthcare, I mean, there are so many different places to put your money. And I think much of the narrative, much of the focus has been on AI. And I think you need to be allocated to AI, but you also need to look at the broader economy as a whole.
All right, Greg Farinello, head of U.S. rates at Ameribest Securities. Thank you so much for joining us on NYSE Live.
Thank you, Ashley.
Coming up, NYSE listed HSBC released the results of its latest venture healthcare report. Find out what the data says and the role AI is having across the sector next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. In January, NYSE-listed HSBC unveiled its 2025 Healthcare Venture Report, which provides a sector-by-sector view across the biggest trends in biopharma and health tech. I spoke with the report's author, John Norris, managing director of HSBC Innovation Banking, who shared which themes are receiving the most attention. Take a listen.
When we're looking at the private venture healthcare arena, the major theme that I saw in 2025 really was the emergence of AI across all the different healthcare sectors, and not only within health tech, which is using AI to just help in get processes within the healthcare system better, but it's also within med device with surgical robotics and brain computer interface. It's in biopharma with drug discovery and development. And it's just a very interesting area where the tools of AI are really starting to find their footing in the healthcare world.
All right. And what are some use cases besides what you've mentioned for AI in that sector, those sectors?
When you think about artificial intelligence and computational biology, it's just a way of leveraging machines to do a lot of the background work. And what's really interesting is there's so much data out there. And the question is, how can you take that data in a methodical way and actually increase or decrease the time it takes to do a lot of things? And we're really seeing that on the biopharma side with tools and also drug development, where you're coming up with assets that have never been developed, just leveraging the power of artificial intelligence. Now, the proof is still in the pudding. A lot of these things are still really early stage and maybe just finally getting into human clinical trials, but it's definitely a big theme, and we're seeing a lot of capital invested in these companies.
All right, that's right. We are seeing healthcare, the healthcare venture market gaining momentum again. Besides AI, what is driving that momentum?
A lot of it's related to the exits that we saw in 2025. It was a good year overall because one, especially in biopharma, we saw a lot of M&A activity. And not only did we see private M&A activity, which is really important for the venture industry, but we saw a lot of companies that have gone IPO, let's say 2019 to 2024, finally get some great data and then get acquired in the public market. And that's super important because not only does that return money to the companies and the private investors, but it also gets money back to these specialist biotech investors that invest in the public market and allows them to then re-inject that money back into the private venture market. So I think the exit environment is such a huge part of what's driving sort of the resurgence in what we had seen as like major headwinds in the market in the last couple of years.
So that jump in investment activity that we've seen in 2025, how significant is that increase, and what does it tell us about investor sentiment heading into 2026?
Yeah, I think it shows that we've sort of had a pause in the headwinds that we've seen for the last few years. I think we felt pretty good early in 2025 coming out of some of the healthcare conferences, thinking that we've maybe hit the low in the bottom of the downturn. But then we had tariffs and we had FDA strife a little bit in the market, and that pushed us back into a little bit of a conservative atmosphere. I think in Q4, that headwind sort of made its way to more of a neutral status. And I wouldn't say we have a huge tailwind behind us, but having sort of a neutral headwind has really gotten investors to refocus on getting money invested in early stage venture backed companies. I think it was a very conservative atmosphere in 2024 and 2025, but towards the end of this last year, we started to come out of that and see a little bit more aggressive numbers. Not necessarily what we'll see as we look at the overall numbers in 2025, but it's certainly going to be a big factor in what we're going to see in 2026.
And you mentioned, John, those exit markets like private M&A and IPOs finally reopening last year. How important is that for restoring liquidity and confidence in the venture ecosystem?
It is a huge part, because I think when you look at the very largest exits that you see within private venture, a lot of them are driven by companies that go public and then perform really well. And so I think there's a couple things that we have to be cognizant of. And one is valuations that were so, let's say, aggressive in the last few years. So actually, in some of these IPOs, we're seeing a down round to get into the public market from what the last private post-money valuation is. But in essence, it's okay. It's okay to sacrifice a little bit of valuation for getting into the public market, because then there's your chance to perform. And if you perform, either drive revenues or as a biotech company, you get great data in your clinical trial, that's when you start to see the surge in value in the market caps of these companies. And that's when a lot of times the acquirers come knocking. And so that's really what we're seeing. Getting into the public market is so important, but it's hard to get in there. And what we saw, even though IPOs are down versus what you want to look at in 2021, which was the height of the market, we're seeing positive momentum there.
Thanks, John Norris, for that interview. Coming up, Scott's Miracle-Gro will celebrate an anniversary, 3 decades in the making this afternoon. Its CFO joins me to talk more about it next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Later today, the Scott's Miracle-Gro Company will ring today's closing bell to celebrate 30 years as an NYSE-listed company. The firm has been an industry leader for over 150 years, and in 2025 brought in Martha Stewart to be its Chief Gardening Officer. Joining me now to share more about the company's growth is its Chief Financial Officer and Chief Accounting Officer, Mark Scheiwer. Mark, welcome.
Thank you. Great to be here, Ashley.
So happy to have you. So what does it mean to be listed on the New York Stock Exchange for 30 years, 3 decades?
Yeah, it's an amazing time. I would tell you I spent half of those years at Scott's Miracle-Gro, so 15 years I've been at the company, and I've had a kind of a front row seat to watch us grow the company to what it is today, which is a leader in the North American consumer lawn and garden market. We have outstanding brands, which all the consumers know and love. Scott's, which has fertilizers and grass seed. Miracle-Gro, which is plant food and garden soils, clearly the leader in all those spaces. Ortho, insect and weed control products, and then Tomcat, which is one of our newer acquisitions back in 2014, which is rodent control products. So we really connect with the consumer in their house, all across their livable spaces. It really gives us a unique position of how we can really connect with the consumer across North America, and we don't take it lightly. We invest in the business. We do our best to continue to make good experiences for them.
All right, and what is the history of Scott's Miracle-Gro? You've been around for more than 150 years.
Yeah, it's a very long history, over 150 years. It started back in Marysville, Ohio in 1868. O.M. Scott, he was a Civil War veteran. He started his own seed company and storefront, and we still own that storefront in Marysville, Ohio today. He grew it to a seed and fertilizer business that you see now on the Scott side of the house. And then in the 1950s, Horace Hagedorn founded Miracle-Gro and grew the Miracle-Gro side of the business, the plant food, and then ultimately the garden soils. And then Horace's son, Jim Hagedorn, is our CEO today. So very rich history. We don't take it lightly. We definitely constantly reinvest in the business, both R&D and how we bring packaged goods to the consumer and create a positive experience. So it's definitely a long history, and we look forward to many more years to come.
And I understand that you saw a big boom during the pandemic because people were at home gardening, taking care of their lawns and their plants.
Yes.
What has the journey been since then?
It's been to me, it's been a great journey. We saw 20 years of sales growth over the first couple years of the pandemic. What the pandemic told us is that we are essential to consumers. People love gardening, they love their yards, they love their livable spaces, even indoors with plants. And it created a greater connection with the consumer for us. And so coming out of that, we've had some lows to that, right, with some volume corrections. But over the past few years, we've done nothing but right-size the business, grow sales, reinvest in our brands, reinvest in R&D. The thing I like as the CFO is we've grown our advertising and media and consumer activation spend over the past few years to connect with consumers again, even greater since the pandemic. And to create new products. I mean, we continue to expand our portfolio around naturals and organics, and it's been great to see over the past few years.
And speaking of those naturals and organics, I know that you are targeting the Gen Z and millennial consumer, the next generation of homeowners, as you told me before we started. What's your strategy in attracting that customer base?
Well, that strategy covers all of our brands. The Gen Zs and millennials are the next homeowners. They own homes today. We view them as very much a growth opportunity for us, a way to connect in different ways. Across all of our product lines, we've introduced naturals and organic products across all of them. So Martha Stewart's here later today. 2 years ago, we introduced the Miracle-Gro Organics line with her support and leadership. And it's been a resounding success. Over 100 million in new sales over the past 2 years. That product line continues to expand, which is great. And it connects with the gardener that wants those organic products. So that is such a cool thing to see. In addition, on the lawn side, we've got some cool products that we're rolling out that are safe for kids and pets under the Turf Builder brand. In addition to that, we introduced a smaller brand called OM Scott that is natural lawn food and grass seed, and that was a digital brand that's grown over the past year to what it is today, and we're excited to see where it goes. On the controls side, we just announced a partnership with Murphy's Naturals mosquito repellent, and we continue to roll out on the control product, which would be insect and weed, more natural products. So we have an opportunity, given our supply chain, the distribution channels, and then also our amazing R&D and scientists, to really continue to grow that space and have good outcomes for folks when they use naturals and organic products.
All right, Mark Schreiber, Scott's Miracle-Gro's Chief Financial Officer and Chief Accounting Officer. Thank you for joining us at the New York Stock Exchange.
Yep.
In just a moment, we'll take you to AGI's opening bell as it celebrates its IPO. But first, the NYSE held its second annual partnership day last week, bringing together influential and creative leaders from across the media, advertising, and content ecosystem. Let's take you back to that moment.
The NYSE is a storytelling powerhouse. We are building a modern media network. Partnership can be a multiplier. We're spanning industries, we're creating more connections. Partnership built together is right here. And we are the backdrop for transformative storytelling. Because on 11 Wall Street, this is exactly where partnership becomes progress.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. A lot of excitement on the floor. There is an AGI chant going on, and in just a moment, they're going to ring the opening bell to celebrate a milestone moment. The Brazilian fintech firm is here to celebrate its IPO. Following the price discovery process that will take place early in today's session, AGI will begin trading on the NYSE under the ticker symbol AGBK. AGI says it's on a mission to help underserved segments of Brazil's population, and it currently services over 6.4 million active clients. And AGI is going to become the 28th NYSE listed company from Brazil. There they are up at the podium. The country has a large presence here at the NYSE. Only the US, Canada, and China have more listed companies. We just saw AGI's founder and executive chairman Marciano Testa ring the opening bell. His company, of course, after the price discovery process, will be public, listing on the New York Stock Exchange. It's always an exciting moment when companies go public here at the NYSE, and the stock market is officially open for trade. Joining me now is Matthew Tuttle, CEO and CIO of Tuttle Capital Management. Matthew, welcome.
Hey, thank you for having me.
So what are you going to be following most closely as trading gets underway?
Yeah, so a lot of stuff going on in the market. And as usual, what you see in the indices doesn't really reflect what's interesting. So what we're going to be most focused on is what area of the market is AI going to eat next. It was software starting a couple weeks ago. Property and casualty the other day. We actually told our newsletter subscribers this morning, buy the dip in the property and casualty. Yesterday it was wealth management. What's it going to be next? But really, what we're telling people is buy areas that AI isn't going to crush.
All right, and the January jobs report came out earlier this morning. It was much better than expected. How much do you believe it's going to impact today's session?
So I think it's going to impact it a lot. Futures went from flat to up pretty big on that number. I still think there's going to be some uncertainty there. Is good news, or is good news bad news? Bond yields immediately spiked. I think you've got people concerned that this may keep the Fed on hold for longer. I don't think so. I think Trump is going to get what he wants with the Fed, but certainly you want to keep an eye on rates because that could derail some of the good feelings that you're seeing now in stocks.
All right, and we are in the heart of earnings season. We've heard from 6 of the 7 Mag 7 firms. They've reported in just the past 2 weeks. What did you take away from the figures?
So I took away that, to me, the biggest catalyst in this market is the AI CapEx spending, and it's still going strong. We love the Mag 7 companies here. We think that if you look at all the main themes that we're going to see in the market over the next kind of 1 to 3 years, a Mag 7 company is going to be the leader there. We put our money where our mouth is a couple weeks ago and launched MAGO, our Mag 7 ETF. We think that Mag 7 is something you want to buy into, especially on the weakness we've seen in these names lately. We think that rotation is going to come back.
All right, and NVIDIA is due to report 2 weeks from today. What questions do you hope that Jensen Huang and his team answers?
So it's not as much what questions does he answer as much as does he kind of keep the narrative going. You don't want him to, have any big China risks. You don't want him to have any risks of, people not buying what he's selling. You don't want to have any OpenAI risks. We had some uncertainty. Does NVIDIA have a deal with OpenAI? Do they not? You'd like to get some clarity on that, and hopefully everybody is friends.
And Matthew, how should investors be approaching the latest AI developments, as you were talking about before?
So you really want to go into areas that AI is not going to eat. And, I love robotics. I love space. Something we've been writing about a lot is the secret gap, which is, what technologies are in secret government programs that might eventually surface, like we saw with the internet and GPS years ago. We just did an ETF for that last week, UFOD. Those are a lot of the areas. I'm also looking at European digital sovereignty. That's more of a diversification trade. I don't think you're going to see a European country be as investable as Mag 7, but I do think it makes sense to get a little bit of European allocation.
And what advice would you have for investors who are navigating this market volatility and headwinds?
So we teach people a concept called the heat formula. And the H in heat stands for hedges. Always be hedged. Is AI in a bubble? Maybe, maybe not. Are you going to call the top of that bubble? No. So invest what the market is showing you, not what you think, but always go to bed with hedges in your portfolio. And then you'll be able to sleep at night. And long term, you're going to be fine.
All right. Thank you, Matthew Tuttle, CEO and CIO of Tuttle Capital Management.
Thanks.
Still to come, Surge Therapeutics says it has completed an important step when it comes to treating breast cancer patients undergoing breast-conserving surgery. Its CEO is going to share the details. And elsewhere, NYSE-listed Shift4 Payments says its platform is enabling memorable experiences around the world, including at the Super Bowl. Its chief executive told us how it's driving growth. And later, AGI founder and executive chairman Marciano Testa will join our Kristen Scholler from the trading floor to discuss the significance of today's celebration and what's next for the firm. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Surge Therapeutics, a clinical stage oncology company, says the final patient has been dosed in its phase 1 clinical study of its lead program in breast cancer patients undergoing surgery. Joining me now is Michael Goldberg. He is the CEO of Surge Therapeutics. Michael, welcome to NYSE Live.
Thank you. It's such a pleasure to be here.
So what is Surge Therapeutics and what led you to working on this company full time?
Thanks for asking. So Surge Therapeutics is the culmination of more than a quarter of a century of a commitment to contribute to a cure for cancer. I unfortunately lost my best friend to cancer, and I've been doing cancer research since I was 16 years old. This is my life's work. Now, it's really, really important because I've actually lost 3 additional friends, specifically to post-surgical cancer recurrence, since I left my faculty position at Harvard Medical School to focus full-time on improving how, when, and where cancer immunotherapy is deployed. Tragically, my experience is far from unique. There are 9 million cancer patients every single year who undergo surgical tumor resection. Approximately 40% of them will recur within 5 years, and 90% of cancer-related death is owing to recurrence and metastasis. Taken together, these numbers suggest that recurrence and metastasis are the single biggest unmet need in oncology. And by way of simple analogy, if you have a weed in your garden and you cut it, yes, superficially it looks like it's gone. But if you don't get at the root of the problem, what will happen? It'll return, it'll spread, and it will cover your garden. And I don't accept this, and neither does my team. We have a moral indignation against this disease, Surge is predicated on a motivation to create a world where nobody grieves the loss of a loved one to preventable post-surgical cancer recurrence. And so when my lab at Harvard developed this novel approach that you've described called intraoperative immunotherapy, I shared both the concept and the data with people who are much more intelligent than I am, and also who had a history of developing transformative therapeutics for patients. And they encouraged me to dedicate myself fully to Surge because they saw an opportunity here to fundamentally reimagine the standard of care for patients with solid tumors.
What is intraoperative immunotherapy and how is it different from immunotherapy that is typically delivered today?
Yeah, so intraoperative immunotherapy is unique in that the goal is to deliver these immunomodulatory drugs at the site and at the time of surgery. Now, this is in contrast to traditional approaches, which would involve systemic administration, meaning throughout the body, and being done typically weeks before or after surgery. So local administration has two key advantages. The first is the opportunity to reduce systemic side effects. The second, which is probably more important, is the potential to increase the effective concentration of the drug where you want it, right? And so fundamentally, there are 4 times that a cancer patient gets medicine. Before surgery, maybe a couple cycles to try to shrink the tumor, make it easier for the surgeon to remove. Surgery, number 2, we'll come back to. Number 3, after surgery, maybe a few weeks later after the patient is healed, they'll get medicine, but the residual disease may have had an opportunity to develop strategies to evade the immune system. And finally, 4th, which is where most oncology drugs are developed, the metastatic setting, once the disease has already spread. And this is very, very challenging clinically because there are lots of cancer cells, there is a dysfunctional immune system, and there's what we call a concentrated immunosuppressive microenvironment, meaning there's kind of this like molecular and cellular fortress. That's hard. You could ask a 10-year-old, right? Would you rather treat a cancer patient who has billions of cancer cells in their body or a few thousand stragglers left behind post-surgery, right? It's pretty obvious. Fewer cancer cells are going to be easier to treat. And it's not just theory, it's practice. So there's clinical evidence that shows that it's much easier for the immune system to clear minimal residual disease than it is to treat advanced macroscopic disease.
And why do you feel that the moment of surgery is an underutilized opportunity to engage the immune system?
Yeah, so surgery is a very, very opportune time, as you've noted. And it's actually the standard of care for every major solid tumor, right? Lung, breast, colorectal, prostate, kidney, liver, ovarian, you name it, it's surgery. But what does the intervention look like today? The surgeon goes in, she or he cuts out the tumor, and then does what? Sutures up the patient and sends them home. This makes no sense to me. Does that make sense to you? We have access to exactly the right place at exactly the right time. We're leaving it empty. Wouldn't it be preferable to give immunotherapy in a hydrogel in that space so we can concentrate and retain it right then and right there? And so that's what we're seeking to do. It seems like a huge missed opportunity. And if we remember one thing from this conversation alone, for me, I hope it will be the following. Surgical oncology today is a physical intervention only. We believe that it should and can be a therapeutic intervention as well.
All right, Michael Goldberg, CEO of Surge Therapeutics. Thank you for your tremendous work and thank you for joining us on NYSE Live.
Thank you so much for having me.
Elsewhere, last month's 28th annual ICR conference in Orlando, Florida brought together industry leaders to discuss the latest consumer trends. NYSE-listed Shift4 Payments was among those in attendance, and its CEO, Taylor Lauber, sat down with me to discuss how the firm is standing out and what's driving its latest growth. Check it out.
We put ourselves at the center of all the most meaningful experiences in your life from a commerce perspective. So whether that is a family vacation, whether that's watching your team live win the Super Bowl, buying a luxury item for a loved one that you're thinking about while you're traveling abroad, or even just that night with friends that went way too late at a restaurant, we are the commerce behind all of those experiences. So we power about 1/3 of the restaurants in the United States, about 40% of the hotels, and 75% of all the stadiums and theme parks in every league, and only recently have begun in luxury retail, which is obviously a really big theme.
For these entertainment venues and restaurants that you're representing, what is the pain point that you're eliminating for them?
So think about the software needed to run your business and how much more complex the world's gotten today than even 5 or 10 years ago. Your average small business is using as much software as a medium-sized hotel might have used 10 years ago. And managing all that and connecting all of those revenue centers for a common experience and a single deposit that the owner-operator of that business gets at the end of the night is a real challenge for them. So we can integrate all of the software at all these revenue centers into a single point of integration so the consumer or fan gets a singular experience and the owner of that business gets a single deposit with a really clean reconciliation at the end of the day.
What has your growth been like in the past 5 years, and what do you attribute the growth to?
So our growth's been tremendous. We've grown payment volume in excess of 30% for the past 5 years. Payment volume is how we think about the health of our business. It's the revenue that our merchants are generating on our platform. And so growth has been, a 30% odd CAGR for the entirety of the last 5 years. And if you think about the last 5 years, it hasn't been that easy for the industries that we operate in. So we have a large presence, as I mentioned, in restaurants and hotels and stadiums. You can imagine what COVID did to those businesses. So to produce this level of growth, we're really not relying on our customers to grow for us, but adding lots and lots of customers. And we've seen that demand. We've seen no upper bound to sort of the complex situations our merchants want us to manage for them.
Do you think some of that growth is attributed to people wanting to return to like IRL, like in real life experiences post-pandemic and that pandemic fatigue?
So we certainly saw a rapid pull-through of payments around experiences. That's really how we anchor ourselves. We think about ourselves as a business powering commerce for experiences. And we've seen a pretty pronounced and we think permanent shift to spending money on experiences from the individual's perspective, whether that was rushing out to restaurants when people were allowed to in 2021 and 2022, or 23 and 4, a rapid desire to travel and spend around the world. That's certainly been there, and interestingly, that flows through into our stadium and theme park presence as well.
Can you tell me about your acquisition of Global Blue? Like, what is it, and how do you think it'll impact the business?
Yeah, sure. So we like to move boldly. Boldly forward is a motto we use inside the company, and Global Blue represents that on every scale. So Global Blue is one of the largest luxury retail commerce providers in the world. They provide a tax-free shopping experience. So think that you're going to any of the Hermes or Louis Vuittons of the world in Paris, and you want to buy something for your loved one and bring it back home. The ability to get a tax refund on that as a foreigner is something that's really valuable both to the consumer and to the store. You tend to purchase more in the store as a result of knowing you could get 10, 15% back as a result of making your purchase as a tourist. Global Blue facilitates that for about 85% of the luxury retail merchants in the world. So they have a really strong presence already inside of all these great retailers, and yet the payment experience is quite fragmented. It's usually a handoff between 3 or 4 different vendors to make the purchase, to the tax-free shopping forms, to the validation work, along with all the other pieces of commerce that go into a complex environment like that. Our view is by owning these technologies, we can combine them together and deliver a much more cohesive experience for the retailer, and ideally a better experience for the consumer as a result of that as well.
Where do you see the experience economy going in the next 5 years, and how do you plan to scale your business to meet that demand?
So we see a real step function evolution in commerce for the types of merchants we want to serve. So we have a deliberate strategy to be in physical commerce where people are engaging with a good in person or a service in person. And so, you mentioned earlier that the consumer and experience economy is growing rapidly. We don't see that changing. We see, quite frankly, the demands on those merchants to be higher and higher than they ever have before. So what our merchants are asking us for is, how do I service travelers from all over the world that might be used to using a different payment method than is predominant in the United States? How do I match that, German traveler or French traveler or Chinese traveler with currencies and methodologies of paying that they're used to in their home country, but for services that I want to provide to them, in my home country or elsewhere in the world?
Thanks, Shift4 Payments CEO Taylor Lauber for that interview. Coming up, today's bell ringer, AGI founder and executive chairman Marciano Testa is going to join NYSE Live as his company celebrates its IPO. There he is on the floor with Kristen Scholler. Stay tuned.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. Earlier this hour, AGI rang the opening bell to celebrate its IPO here on the NYSE. It will begin trading under the ticker symbol AGBK. Following the price discovery process, I want to send things down to Kristen Scholler on the trading floor, who's standing by with a very special guest. Good morning, Kristen.
Ashley, good morning to you. It is a big day down here on the floor of the New York Stock Exchange. More than 100 attendees here to celebrate AGI's IPO. And joining me now is the founder and executive chairman of AGI, Marciano Testa. Marciano, welcome. Congratulations to you and your team.
Oh, nice. Thank you. It's a great pleasure to be here.
What differentiates AGI? What makes it unique?
Great. So basically, we are reshaping the retail bank in Brazil through our unique business model that consists in a full digital bank combined with over 1,100 smart hubs around the country. That's given us advantage to serving the largest and fastest growing population in Brazil. That's consistently in people they are being left behind of the traditional system, financial system in Brazil. So we have a huge opportunity to continue growth in Brazil, basically because we see a new dynamic happening right now in Brazil. The traditional banks, they still closing a lot of bank branches, and for us it's a huge opportunity to serve those customers that they left behind.
Why IPO now?
Good. So we are so happy with this milestone because we now the IPO allow us to access more capital and high quality investor, global investors to continue disrupting this market in Brazil.
What comes after the IPO for AGI?
Yeah, for us, in my mind, it is day one, right? Now we are very excited to continue growth, especially surround the small cities, surround the country, and the small town that we are the only bank present there. And we have a very huge opportunity to continue disrupting this market, and basically through our unique business model. It's a hybrid business model. It's a full digital bank that we combined with a network that we have right now, over 1,100 smart hubs around the country. So we are excited to maintain our team very high engagement to continue this journey along the next years.
Marciano Testa, he's the founder and executive chairman of AGI. Congratulations again.
So thank you. It's a great pleasure to be here. Thank you for the opportunity.
Yes. All right, thank you to Marciano and the entire AGI crew. Again, about 180 people down here on the floor of the New York Stock Exchange to celebrate today. We are going to await that first trade bell. Of course, you can follow along at the ticker symbol AGBK. Ashley, an exciting morning here on the trading floor.
So exciting, Kristen. We heard the AGI chants from up in the booth. It was a very, very electric morning, as many IPOs are at the New York Stock Exchange. Kristen Scholler, thank you so much. And we're going to take one last look at the markets before we go. The Dow Jones is up almost 0.5%, well above 50,000. The S&P 500 up almost 0.5% as well, very close to 7,000. And later this week, the Bureau of Labor Statistics is going to deliver the delayed January CPI index, giving investors the latest update on the state of inflation. We're going to have all of that information here on NYSE Live. And as you know, the U.S. economy, those jobs numbers came out today. They added 130,000 jobs last month. That's well above economist estimates of 55,000. And additionally, the unemployment rate fell slightly to 4.3%, a tick below estimates. Again, we're going to keep you updated on all of the economic data, all of the markets, and we're going to see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?